The move is aimed at safeguarding the country's peg with the South African rand while continuing to support local economic activity.
In accordance with the guidance note issued by the Bank of Namibia in June, commercial banks are expected to reduce their prime lending rates by 12.5 basis points to 10.375% by the end of September 2025. The normalisation in the prime-repo spread that is in the pipeline is expected to provide support for domestic economic activity and credit growth going forward.
Governor Gawaxab noted that inflation eased to 3.6% in 2025 compared to 4.8% in 2024 during the same period, largely driven by lower inflation in housing, alcoholic beverages, and deflation in transport. Real GDP growth is now projected at 3.5% for 2025 and 3.9% for 2026, slightly lower than previous forecasts. Namibia's merchandise trade deficit dropped by 28.2%, shrinking to 12.8 billion in the first half of 2025, mainly driven by strong export growth in uranium, offsetting the rise in imports.
The stock of international reserves remains adequate, rising to 58.1 billion Namibian dollars at the end of July 2025 from 57.4 billion Namibian dollars at the end of May 2025, aided by SACU receipts. This level of foreign reserves translates to an estimated import cover of 3.8 months, which is considered adequate to sustain the currency peg between the Namibia dollar and the South African rand and meet the country's international financial obligations.
Meanwhile, the South African Reserve Bank recently cut its repo rate, narrowing the interest rate gap between the two countries. Namibia's rate remains at 25 basis points, below that of South Africa, a move the governor says supports local growth without undermining capital stability. Siamantikwa, NBC News.